Russia-Ukraine war drags PSEI down. US inflation surges. Crude oil continues to go up, pulling down stocks further. Peso weakens, dragging it to its weakest point in more than 3 years. PSEI plunges to a new one-year low. And to add to everything, food inflation worsens due to crop damages due to extreme weather, and imports have also been delayed, exacerbating the supply crunch. Wow, negative news after negative news. Ever since the start of the pandemic back in 2019, investors in our country had been battered over and over again. My portfolio over the past months had lost more than 150,000 pesos in value. When will we have a break from all of this? Well, in fact, if you are a long-term investor like me, it isn't all that bad, and it's actually an opportunity. No, not just an opportunity, a great opportunity to be exact. So in today's video, that's what I would be explaining. And of course, since this is a monthly update, the happenings in my portfolio as well. So let's start. With the PSEI dropping to less than 6,100, it is the lowest it has been in 1 year, and it's fairly normal for investors like us to feel down or to question ourselves if investing is still a good choice. But before we talk about that, what is really a good choice is to click the like button and subscribe. Anyways, with the market trending sideways for 2 years now, well, it's not just 2 years for those who invested in 2014 to 2018, because the price today is lower than in those years. So it's normal to question investing. But remember, in investing, your mindset shouldn't be in the 3 to 5 year range. Heck, not even 8 years. Your horizon should be 10 years or more. The money that you should be investing here are the ones you won't be using. Because though the market is like this for now, eventually, it will climb up. This had been proven countless times. Just by looking at the history of our index, some years it goes down. In a couple of years, it stays the same. But in the long run, it goes up by a lot. Our market today is just reacting normally to everything that is happening, which is all bad news. And when there's bad news, investors tend to stay on the sidelines or even sell their stocks, dragging prices further. But take note, even when the market is trading sideways, you can still earn a lot. This is by picking the right stocks and of course, through my favorite income source, dividends. And if you're just investing in the index, you are buying more shares of that fund at a discount so that when the market does rise in the future, the more gains you can get. Same as in individual stocks. When the market is trading sideways for a long time, you get to buy great companies at a discount. These companies don't often go on a discount, which is a very big advantage for us starting investors, especially for those who get their investment money from their monthly salary. And remember, investing is still so much better if done correctly than just putting your money in a saving account, more so a piggy bank, which doesn't even stand a chance against inflation, which right now sits at 5.4%. At least in investing, you get a chance to fight back against inflation, and in the long run, may even grow your money multiple folds. But of course, it has to be done correctly, and you have to have the right mindset for it so that you can take the volatility of the market. Now, I talked about this in detail in my last video. Is the Philippine stock market entering a lost decade? I suggest you watch it as well after this. Now let's move on to my portfolio. Right now, my total invested money is 1,317,600, and with the market going down by a lot these past few weeks, my portfolio's return has dropped to 3%. Now at the start of the year, my gains were almost close to 200,000. This is a loss of 150,000 for me. My gains are still positive because of the dividends I reinvested. This really emphasizes the importance of reinvesting dividends, especially when the market is falling or stagnant. Now for many, this would be bad news. For me, I really don't care, since I'm not even planning to cash out my investments for a long time. Like I've said earlier, when stocks drop, this is a great opportunity for me. And since I'm relying on my monthly income for my investments, this is an advantage since I get to buy a lot of great companies at a discount. And when stocks are down, the higher the dividend yield is for most stocks. So although it's not good in the short-term perspective, since my portfolio is almost in the negative, in the long run, it's a good thing since I've accumulated a lot of stocks at a lower cost, and the dividends I will be receiving, which are higher, will be compounded for the years to come. You know, back in 2019, most of the stocks I'm buying right now has a low dividend yield because their prices are high, but now even the stocks that don't have a high dividend yield can be considered dividend stocks. So for me, I don't care if my portfolio is down, as long as I know the company I'm buying is a great company with good financials and has the potential to grow more in the future. I would even be happy if its stock price would stay stagnant for a while to let me buy more of it at a lower cost. Now moving on, the stocks I bought this month are DNL Industries, Security Bank, and Philinvest Land. All three companies' stock prices had dropped significantly these past few weeks, especially DNL. I wasn't able to buy any of it ever since last year since it doesn't go down below my buy price, so I'm really happy that I get to buy more of it. With that, DNL is now my fourth largest holding, followed by Philinvest Land. So if you've watched my past portfolio update, my largest holdings keep getting shuffled since some of them I can no longer buy due to their price climbing up. So right now, holding companies still takes up the majority of my portfolio with a 31% share. Now I've discussed in my past videos why I love investing in holding companies, since just by owning one company, you get to hold indirectly the different businesses that the company holds. Moving to my dividends, and what a month this is, I got almost 13,000 pesos, making the dividends I received this year to 37,300. This makes my average monthly dividend income to 3,114 pesos. This is without doing anything. Now the total dividends I receive in my whole investing journey is 89,338, and there are still a lot more companies that will give out dividends this year. DNL and AUB have already announced their payout. Globe still has 2 payout left since they usually give out 4 times a year, DDMPR as well. Security Bank, I think, has 1 round of payment left. As for LTG, they paid 4 times in 2020 and 2021. Let's see if they will have another round of dividends this year since they've only paid 3 times. And hopefully, Mega World would also give out dividends. Now I'm really excited to reach a milestone of 100k total dividends received. But anyway, though I want to reach that, I still won't chase after dividends. Now I discussed this in a video I made about dividend mistakes that you should avoid. I'll leave a link below. As to how well my portfolio is doing compared to the index, it's basically moving in the same direction, since some of my largest holdings are a component of the PSEI as well. So right now, my portfolio has a return of 3.51%, while our index is still at a negative 22.8%. Not bad. This also helps me control my emotions, since even though my portfolio has fallen considerably this past few months, when I look at our index, I know this is something unavoidable. Most companies' stock price is down, and with all the negative news so far, I'm not even shocked as to why the market is dropping over the past months. That's why don't be too hard on yourself. If you know what you're holding in your portfolio are strong companies, then there's no need to panic, and it's actually a great time to buy more. And for those who are investing in an index fund, just do what you normally do, investing regularly every month. With that, I leave a quote from the legend himself, Warren Buffett. Successful investing takes time, discipline, and patience. No matter how great the talent or effort, some things just take time. Like what I've said earlier, don't be too hard on yourself. In today's market where a lot of negative news keeps popping out, no matter how hard you try sometimes, you just need to wait and do the things you can do, like concentrating on buying great companies that are in a discount, and just wait and do nothing. Don't overcomplicate things. It is normal for the market to go up and down. It is not a straight line upwards. If you don't know this happens a lot and don't have the right mindset to handle it, then the stock market isn't for you. It isn't a one-day millionaire scheme. It takes time. Compounding takes time. That's why no matter how knowledgeable you are, even if you know all the complicated strategies, if you lack discipline, then you will definitely fail in investing. So in conclusion, have a longer time horizon and be patient. If you can't handle market fluctuations, then don't look at your portfolio every day. The market won't change its course even if you actively look at it. So just be consistent and invest in great companies that you think are undervalued. With that, this ends this video for today. So before you leave, be sure to hit the like button. So thank you and see you in the next video.